Good morning, traders. Welcome to Friday of this beautiful week. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before we jump on in, as always, we need to check the news so that we know what's going on and when, so that we're not taken by surprise. So looking at the news calendar for today, starting off, we've got some news at 8:30 with the core retail sales. The forecast is negative 0.1%. Also at 8:30, we have the PPI for December, forecasted at a positive 0.4%. Retail sales as well, just a couple things coming out. Negative 0.2% is the forecast for that, and that's all at 8:30. So there's a big chunk of news at 8:30, and then it quiets down quite a bit, actually. Going into the afternoon session, the rest of the morning session, I guess, has some medium to small news announcements. We've got the U.S. Baker Hughes oil rig count stuff on Friday, CFTC speculative net position stuff, but that's it. So all the big news is at 8:30, and after that, it all just kind of quiets down again. So makes it pretty easy. So with that out of the way, let's jump in for today. Today's date being 1/15 of 2021. Starting off on the NASDAQ, we can see the market overall is still just kind of range bound. It's creating these multi-tiered ranges where it's kind of bouncing around here, breaks out, bounces around here. It's either going to break back down again and go sideways or break up and maybe find a new one. Either way, we're in the lower edge of the range, and if we're looking at the overall momentum to the upside, buyers are getting a halfway decent pullback, looking for more continuation to the upside. The big caveat here is that we need to really break through this falling resistance. Every time it's tried to break, it's failed shortly after. We had that break, and then it failed all the way down to a new low. That one broke and held as kind of support a little bit later. Went a bit further up. That's the only one that's really been kind of confirmed. Going from there, that broke. This one broke. None of them are really standing true yet. So we don't have anything to necessarily work off of. But the nice thing is we do have at least two very defined points. Gives us something, at least it's better than nothing. But we've got to break through that. And once it breaks through that with some conviction, then we've got a shot to actually take this a bit further up. As it stands, though, we're still seeing a lot of weakness from the bull side. It's mostly just in a range. We are in the lower part of the range, so that definitely helps. Buyers will be looking for a bit more continuation up from there, but it's the same buy zone that we were looking at yesterday, and I think the day before. It's all stacking up in the same spot around these 12,850s, and as long as buyers continue to hold here, well, we're probably going to go back up again. Over on the S&P, we've got some good continuation to the downside and seeing sellers really holding kind of this big megaphone now. It was looking very range bound for a little bit and nothing was really happening, but nice slide at the end of the day leading into an overnight sell all the way down to a new low. This is one of two things. This is either the break point of previous support, which right now hasn't really even broken, or we hold it as support and continue back up, or we run into the situation where they're probing these lows. They took out all the stops, but there's so much pressure that it ends up cracking lower and continuing down to the lows of the megaphone. We're on a little bit of a seesaw at the moment. A lot of selling resistance coming in at the highs, and it seems like they're holding strong. So at the moment, bears seem like they've got a bit more control, but if they fail that breakdown through the 3765s, then they're going to run into some trouble. On gold, we're showing some pretty good continuation to the downside, and realistically, it's still consolidating down here. Sellers still have yet to get a move back into their L2, and buyers continue to hold down at the lows. Nobody's really winning any fights. A lot of shorts, realistically, they're still short. They don't have a reason to get out yet. And a lot of longs could potentially still be long because they don't really have a reason to get out either. Buyers are holding support really nicely. Sellers are holding resistance really nicely, and nobody's getting any continuation. A lot of times in that situation, you'll see a false break of one side, and that wipes everyone out, and then it'll reverse the other way. This is kind of the absorption stop move, and we haven't seen that yet. I guess there's a little one right here, which may be enough to trigger in the bulls, but even now we can see the bulls are running into some trouble. I still think we need a bigger, better trap. And what better spot to trap the highs into the seller's L2 and then just obliterate it all the way back down to the lows. Obviously, you can kind of see what I'm looking for, but buyers are trying to get a reversal. And if the sellers fail here and they can't hold this area, that's going to get a lot of sellers stuck for a possible reversal move back all the way potentially to the highs again. So this is a big zone here on gold. And speaking of potential traps and reversals, looking at crude oil, man, this thing is going really, really sideways. Big range floating around the 52s, 53s, and this isn't a big surprise. This is exactly the area where we expect to see a bunch of resistance. This is where the buyers were taking profit on the major, larger time frames. Now, the big thing that's setting up here is we've got this rising wedge support and falling wedge resistance, and the market's just swinging back and forth between these 2 points. There's nothing in between. It's just straight up and straight down. But, big caveat here, sellers who tried to get into the move earlier, assuming that this breakdown had some substance to it, they will have been shorting aggressively in here, and they got absolutely thrashed. And you can see they were given a chance to get out of break even. After that chance to get out of break even, and the only reason I say get out of break even is the response. This thing went screaming higher. And now we came back again, and guess what? We're showing support again. It seems like a lot of sellers were potentially still stuck, and now they are potentially all the way out of the way. So if the market does want to go back up again, there's going to be a lot less resistance to hold it down. And that could lead the way to a potential break back up towards the 54s. I still think this is a major zone of resistance, but I mean, right now the buyers are showing some pretty good support. If it begins to fail back down again, especially through the 5250s, it's kind of game over. We're probably going lower, and that might be a longer-term top that's beginning to get put in, where they're looking to get back into the 50s. We'll see. I've been looking for the 50s for a while, and it hasn't given it to me yet, so maybe it'll keep me waiting again. Over on the euro, the sellers are continuing to try to drive the market back to the downside, and we're back to retest that major break point. This is this is the zone that, if the buyers are going to defend it, this is where they're going to defend it. This is a defense of their earlier entry point, which obviously was strong. So if they're going to be buying, this is where. Now, if it begins to break down again, that can cause some obvious problems where we'll see a little bit more continuation to the bottom of the wedge, where we've got a lot more support. And that is, I mean, that's a pretty sizable distance down if we're looking at a move lower down towards the 1.209s, if it starts breaking back lower. And everything is kind of pointing to continuation to the downside. Nothing is showing that the buyers are taking control yet, and the sellers just keep pushing. And finally, rolling over to Bitcoin, looking at, I mean, about as perfect of a structural wedge as you can get. We're holding L5s on the lows, L5s on the highs. It is it's a literal perfect wedge. This is a textbook wedge. You don't see these very often. It's holding resistance on the highs, and it was a little bit fuzzy up there, to be fair. That's a bit more market-esque in the real world. But with this continuation of the downside, it's fairly obvious what the intent of the sellers is. We hit the highs of a wedge, buyers took a lot of profit, now it's rolling back over. The major objective with all of this divergence on the highs and everything else would be pointing back down to maybe all the way down to the lows of the channel. And, you know, potentially maybe another larger L5 if they want to keep that wedge going. All right, well, that's going to do it for today. Like we always say, stay safe out there, keep those stops in play, and let the winners run. I hope you have a fantastic trading day today. Enjoy the weekend, and we will see you all back next week. Have a great one. Thanks. Bye.